This is going to be highly technical. You know, if you come down here very often and listen to Mike, Mike's only focus about everything is the freaking rodeo. So, heck, I sat back there for a while and I said, I'm going to put a Kahoot together that's got 8 questions of rodeo and 2 of Lender. So, Mike, this game's for you. You better come up here and sit and play. NFR trivia. You know, all work and no play makes for a dang long day. So, even the Kahoots we do are kind of technical with a couple of random stuff in them. So I know Bill's always giving Mike a little grief about the rodeo. So here we go. Paying first, second, and third. How much you know about the NFR? Okay. It's not even this week. I thought about doing Hanukkah, but you know that'll be later in the week when I'm in New York. So here we go. Got to make sure this mouse is over here. Well, welcome aboard, Brad and Rody. It would have been really good had you go, Rody. Oh. After you do this every day, you start finding out, especially when you're at private trainings with firms like a RSM or something with a lot of young people, by the end of the day, they've gotten creative with the nicknames. Okay, so here we go. 30 questions. 30 players, 10 questions. Come on. Are you ready? Which artist sang the anthem at the National Finals Rodeo before being signed to a record label? Apparently, got her first, well, I said her, so you know it's her. For the 8 of you, 5 of yellow and 3 of green, those pictures were trying to give you a hint. I don't know what you were picking them in for. We're going to need the risk assessment next, and that question already, see, that just tells me that my risks are higher with this crowd, so here we go. Way to go, Amber. Whitney. Oh, I suppose those are actually both used brains for rodeo. Never mind, I'll come back to that comment in a second about why, but here we go. Which is not an event at the NFR? Which of these is not an event? Dang it, where'd my music go? Bronca busting is not one of those. Yes, but it's not the thing. Oh, my mouse moved. Man, Amber, Whitney, and ALS. Lowly Juan, Steve, you guys all playing together? Lowly Juan and Stevie. 3 brains together on a Kahoot game. Here we go. Which is an event at the NFR featuring women, has contestants? These are real rodeo things. Barrel racing, team roping, saddle bronc, all for the men, mutton busting for the kids. ALS, Lowly, Juan and Steve. You a rodeo woman? I was just going to say she probably, never mind. I was going to say something else, I won't say that. Amber, what happened? Que pasa? Homeward Bound. Well, almost done. Ty Murray, a 9-time world champion rodeo cowboy. Rodeo cowboy was married to which singer on this group? She is in the picture.
Yeah, I saw that after I made a guess.
Oh, no kidding. Jewel. Okay, Michaela, I told you. Michaela says, I didn't put her picture in there because everyone will know what Shania Twain looks like and Jewel. And I said, trust me, it will not work out that way. Way to go, ALS. It's a tight group now with Rodeo. The computation of adjusted net worth should. I think you get a chance to get it right now. Michaela fixed it, she said. Well, there's another one coming up. So this is two questions and the rest trivia. Okay, 26 of us got that one correct. That's awesome. Approved entity only. Way to go, Rodeo. 4 players have reached 3 in a row. We're good at the rodeo. The most successful cowboy of all time is which of these NFR champions? It's on the top row. He's a cowboy he's a friend of Joe Dirt. Trevor Brazil. No, that was not him. Man, Rodeo's doing good here. Tough. 4 of you lost your 3 in a row streak. Well, nobody's out of this yet. NFR participants are decided by who gets to come. That's why girls like rodeo guys. Used to be Wranglers, but now it's Cinch. The top 15 prize earners for the year get invited. Rodeo did well. Rodeo might have a lock on this. The total 2018 prize money for the 10-day event will be how much? $10 million. It's dang near what you call $1 million a day, right? 10-day rodeo. Oh, rodeo's out there. Is that you, Mike? Don't worry. He ain't getting any money. He ain't getting money. LEAP input issues include Michaela did a good job there, don't you think? You know, I said,
I was just trying to help.
What's that?
I was just trying to help.
Okay. Yes, everybody got it right. And everybody got credit. What, how he got kicked out? Are you playing on the Wi-Fi here or your cell signal? Try. I don't think we can say. Sometimes it just happens and people try one or the other. Oh, if you weren't in the room, see, if you had a room here, you got. Oh, your room Wi-Fi worked here. The resort fee covers you. My phone's on my hotel room here. Okay, last question, I think. How many total events are in the NFR? No, that's not a trick. That's not a selection point. 8 total events listed. Okay. Who's Alex? Congratulations. Kay. You took a hit for the points you cost everybody in the other game with A and B. Okay, who's number 4? I don't get to see it on the screen. Whose phone says I'm number 4? I'm 4th. Okay, I'll go there and get it's not that instantaneous sometimes. ALS, there you go. Okay, we got one more of those to play before this ends. And of course, we're kind of running to the end of the day. And of course, at this stage of the game at 3:08 and an hour and 15 or 7 minutes to go, you're sitting here going, oh man, what are we going to talk about? Let's talk about risk assessment. Nothing could be more exciting than talking about what the AICPA has in store for you and me. Okay, now look, some of this we're going to go over fairly quickly, and it dovetails very closely in, to a large degree, with what Andy just talked about. So when you look at this peer review process, you know this documentation is a big thing, and we don't have to have any conversation about it. And the focus of most of this conversation is on CX forms. Let's be honest. And CX 7.1 is the focus of 90% of this conversation. Now, the form in and of itself is a wonderful thing, but it's not, well, I'm not even going to say it's a wonderful thing. It theoretically was supposed to be a wonderful thing. But the problem is the form is populated as if it was the audit work papers that back the form up. Planning in and of itself is not the completion of Form CX 1.7. It's the data that produce the evidence for risk assessment. Now, here's a couple of things to remember. This is like, I'm going to go somewhere and teach school one of these days about how to audit, because there ain't very many professors that have done it for money. I mean, really. And I'm going to start this other program that says, look, here's this program. First of all, we don't have such a thing as planning. Planning is like, I can fill out about 6 forms to get started. And then what we have is we have risk assessment procedures. And that's actual audit work. And then we do all those audit procedures to finish the risk assessment to determine the need for the further audit procedures. So that's really AUC 315 and AUC 330. Planning is actual audit work. I've got that out of our mindset a long time. But planning is not filling out a bunch of forms. I was thinking of another pejorative I could add to the previous to forms. So evidence is really what's required. And the forms are not audit evidence. They don't result in anything except a documentation palette to sort of put down your results of what you have observed, either through observation, inquiry, or analytical review. Okay? Now that's kind of in a nutshell how we're supposed to focus on this. Now, the other thing about documentation in this world is you add the yellow book to it. And the yellow book, I'm going to show you an audit report here in a minute. We're going to kind of risk assess this kind of stuff. And the AICPA says, look, remember, HUD is not your enemy here. Of all the risks sitting here, HUD is the easiest thing. They give you a stupid audit program and the audit guide to follow. You go do what they say. Now we're going to make changes to that or whatever. I mean, I don't mean to give it's a bad or inadequate program. It's just, it's written down. It's this other stuff that hurts you. Now, why is that a focus? The lender I'm going to show you today is HUD approved. It's Ginnie Mae, it's Fannie, and it's Freddie. And when you look at what happened, the auditor, it completely ignored Fannie and Freddie. Why did they do that? Well, because they've forgotten it's not just about HUD. The Yellow Book said you're going to comply with all laws, regulations, contracts, and agreements, and I guarantee you one thing when you look at this report. If you went to the work papers, there is no documentation on testing compliance with other laws, regulations, contracts, and agreements, namely, in this case, Fannie and Freddie. They walked right on through the tulips, thinking I got a HUD program for Chapter 7, and I got a Ginnie Mae program for Chapter 6, and boy, I'll tell you, I'm the tall cotton because that's the only compliance testing I got to do, and nope, it wasn't true. I mean, they hit the stop sign or the wall at about 180 miles an hour, and it's a crash and burn. Plain and simple, okay? Why? Because they're not thinking about all of the responsibilities they have. We tell the lender all the time, look, you're not thinking about all these things, these risks you have. Same thing here. We stopped on the easy crap. We had a printed program. Hell, let's go do that. Someone said I had to do it. But this other stuff, Yellow Book. Okay? That first thing, AUC 230 documentation requires the auditor to document the nature, time, and extent of all audit procedures by recording these things. So I want to go on to one more. This was the one I was talking about. I thought I skipped ahead. Laws, regulations, contracts, and agreements. Other things that may affect us. Your client has a boatload of agreements. There is no documentation in the work papers as to whether any non-compliance with those provisions could or could not impact the financial statements. That's what you're looking for, okay? Now, evidence, back to one slide. Think about evidence that's needed. Now, Andy just went through this whole conversation. He said, look, what's the risk of a misstatement associated with a transaction? Well, if he just got done talking about interest rate locks, you can tell me right away how much material misstatement it might be embedded in that. Or, additionally, how much judgment was involved in determining the number. That means documentation requirements went up, and the need for all that decision testing on the judgment went way up with it. What was the nature of the procedure? That's a pretty simple thing. And how much or significant was the evidence to the assertion? The assertion on interest rate lock commitments was valuation. How was that valuation conducted? Yeah, I don't really know. But what it tells me, the evidence was pretty significant to the assertion of valuation. The more significant it went up, the more work paper documentation I should have. Okay? And then, of course, the need to document a conclusion if it's not otherwise or readily determinable. Okay, now that's fine. So we got all this conversation about things to be tested. HUD's easy. A documented audit plan demonstrates the auditor has planned the audit, and you must tailor this stuff. So PPC gets a real bad rap for tailoring, and that's okay. We're going to come back to that. Another bad thing about canned programs, that's fine. Now, deficiencies. What do we see? Well, Dan walked up and said, I hope you're going to be gentle during this risk assessment thing, because I'm pretty damn tired of hearing about risk assessment. Look, what I'm tired of, risk assessment, independence, internal control. Lenders, I'm tired of QC conversations, and if I have to listen to interest rate locks one more time, I might just get a little bit of lunch disappearing. Okay, so look, we're all in the same boat. You're just trying to survive in this world, right? I mean, you got to get enough documentation to make the peer reviewer go away, live with yourself at night, and not have a big disaster. I get it. So how do we do all this, right? Planning analytics. Now, Andy brought up a couple of things about valuation in that conversation. Understanding IT, nothing could be worse in this environment because this whole process is so automated, and I don't know how much we know, okay? Internal control. I have two places that I like to focus on internal control the most, and it won't be on multifamily tomorrow. It's my public housing area and my lenders. If there were ever two groups of clients in my world that need more internal control, and you know, this isn't some basic conversation about, oh, you need more people checking this one against that one, and people ask me, what kind of internal control should I have, John? And John's going to say, those that work. And then he'll probably add in segregation of duties. And the peer reviewer will shout from the back of the room, controls over journal entries or management override. That's not what we're talking about. This is nowhere near the conversation the client has to have. The client is messed up because they don't really think about controls in the right way. The control conversation we're trying to have is not about internal control. It's about accountability. This is the way you have to have this conversation with them. Who's accountable for what happens, right? Who's accountable? And that's a conversation management will always be happy to have. If you talk internal control, they go, where's my CFO? Their eyes glaze over, their eyes are rolled back in their head. My wife calls white eyes. You know, my kids would roll their eyes. I don't want to see any more white eyes. They'll turn off this conversation so fast, it's gone. Just bring up the word internal control or COSO. I revolt against that. Okay, so anyway, we'll come back to that. Fraud or communication, I don't have too much problem in the rest of that. That's fine. So let's talk about what they really said. 2018 to 21 peer review periods. How many of you have seen this most wonderful document? Pretty familiar, huh, Dan? Okay, so Minneapolis this year in August. Where'd my mouse go? Members of the Auditing Standards Board have stated if the auditor fails to comply with AUC 315 or 330, then you're going to have a broken audit. Why? Because you failed to actually get adequate documentation to support the fact that your financial statements are not misstated. Then you don't have enough evidence to support the opinion, therefore we're going to call your audit non-conforming. Now that's just kind of in a nutshell. And they said examples that lead to non-conformance. Virtually every audit should have at least one significant risk. Okay, that's nice. Think about that. But here's what they're really saying starts off the next one down. Failure to assess or document the risk at both the relevant assertion level and the financial statement level. And then they tell you on the next two little bullets. Well, how does that happen? It happens because people confuse account level risk with assertion risk, or they confuse account level risk with financial statement risk. Heaven help me, how did that occur? Okay? Why on earth could that ever happen? And then they said as a result of this, you failed to perform anything beyond basic procedures where the risk of material misstatement doesn't, or the procedures don't address the risk of material misstatement. And they say significant risk requires special audit consideration. Well, I'm not too smart, but even I get that theory, okay? And I think everybody here has that. So what's the problem? The problem is CX 7.1. And the peer review committee, or the group, brought this form up and the conversation ensued, didn't it, Dan? And PPC's in the room trying to defend the form, okay? Now, I don't care how you look at this, and I don't really, I'm not into beating up PPC. They don't need my help to do kind of that on their own. So here you go. What's the problem? By audit area or by assertion? Dang, I didn't have to do it by assertion. I could do it by audit area or assertion. No, dude, that's not actually true. That is not true. If you read back far enough, it says the only time you can do it by account is that the account and the number of things are so insignificant and small, it doesn't make sense to go by assertion. Otherwise, it's by assertion. What does AUC 315 say? You will assess the risk at the assertion level and the financial statement level. Period. So, okay, so first we had to go back to assertions. And that is not that difficult. We'll show that why that is in a minute. So this form is problematic because it starts there. Or. Down the line, all the way down the line. Or. No, it's not or. It should be never. It could be or in very few circumstances, but, theoretically. So what's the problem here? These are the financial statement risks. Now, this is filled out for tomorrow. This is for my multifamily folder. And I don't need to fill this out for you, because what is the number one financial statement risk lenders would have? Financial statement risks are those risks because they come from many accounts or assertions, and therefore they could affect the financial statements overall. So if that's the case, what is the number one risk an auditor is concerned about when it comes to test or auditing a lender? Where did Andy go? He said he was going to stay and listen, then he left. What's the number one risk for a lender? HUD-approved lender, Ginnie Mae, I don't care what it is. What's the number one risk in the financial statements? I know you're all sitting here, you're afraid to speak, because it sounds like a tricky, freaky question. What's the number one thing HUD's concerned about? Bill, what's the number one thing HUD's concerned about? Net worth. Okay, where would I get an understatement of net worth from? Well, I could get it from overstatement of interest rate lock commitments. We just had that conversation. Okay, I could get it from an understatement of loan loss liability reserves. I could get it from overstated warehouse line. I could get it from 5 or 6 areas, can't I? The number one risk in a lender is net worth. What's the second risk? And by the way, what's the second risk? What's that? I think I'm going to tag that with essentially net worth, but it would be liquidity, and Andy brought that up too, right? The guy had plenty of net worth, but it was liquid because he's got it all in interest rate lock commitments. Liquidity would be another piece of that. So I might add that as number 2. What's the other risk, really? What's the other thing HUD really wants to focus on? Well, who said it? Quality control. Bad QC. Okay? That's going to affect servicing. It's going to affect loan generation. It's going to affect how many areas, Stan, would QC affect me on? Bad QC. A boatload, right? Just shut the damn doors and go home. So if I look at it, people are going to tell me now management, look, the default's always management override controls. That's just, if you think about a lender, if I'm filling this form out to me, net worth, I could add liquidity. I might say net worth and liquidity, but either way, if you want to split them, now I'm going to say bad QC, because most of my management override controls will come out of one of those 2 other areas anyway, bad QC, or it's going to show up in net worth or liquidity. So, look, folks, that was we're going to look at some financial statements in a minute to prove how that goes. But if you look at what they said, you could fill out this form really quickly. Now, we're going to walk down some other accounts, frankly, as we look at the financial statements, but you need to know a couple things, right? Or is not an adequate solution. Assess at the assertion level, okay? And then good financial statement risks, and for a lender, boy, if you're all in this boat together, it's top 3. I think that's very hard to escape. I don't care, how many places I go. That's going to be the problem, okay? Now, I'm going to go a little farther, or is it further? I don't know. Into this and the other problem you have here is no real help in the forms department based on lenders. You get forms from a Chapter 3 guideline. So I'm going to give you, I can't have a good alternative to this today. I have an alternative in multifamily, and I'm going to convert the multifamily into lender. And I promise you by next year, I will give you an alternative to PPC. I'm done with it. I'm just done. As far as a HUD-approved lender is concerned, I will give you the alternatives. You can come and get them from HACPA. One damn lender audit can be done like another lender audit. It's They're all going to have certain things that are the same. Some will be more complicated than others. But here's what I can tell you so far. If you look at this, and look, I'm a guy that just says, look, what are we going to have to do practically? Okay? So here I said, look, this was more multifamily, because I use this slide deck a lot more for multifamily. Now, Dan, what's the problem on that form, that one we were just talking about, the word? Linkage. The linkage. Oh, sorry, why did I leave that page? Les, you should have stayed on the page. Because that's where my linkage, whatever linkage was, it was going to be on that page, right? Okay. So let's take a look at this back to the form and just dispel a couple of rumors that I wish I could get to peer reviewers. And trust me, we do this every day. I just went through a peer review with a guy. He was told he was failing. He had the worst, 94 audits, and the peer reviewer's failing him on it. Now, it's the worst Thanksgiving in his life, because he thinks he's going to really get rung through the ringer. When I talk to him, he's like almost, I can see he's just so stressed out, he's going to pop somewhere. Okay? And a lot of it's just misinformation. By the time I got done, he wrote me a thing, said, I'm willing to hire you. And I started laughing. I said, you're not going to have to hire me, because the AICPA is going to solve your problem for you. And I sent him 5 pieces of documentation from an ANA guide. And the whole conversation's over. Literally. And he goes, how did you fix that so fast? I said, you got to read stuff, right? And I don't blame the peer reviewer. Peer reviewers are just people who, they do certain things and they want to be a peer reviewer, but you can't know everything, can you, Dan? It's impossible. And what are you scared about, Dan? What is your main, if you do a peer review, what are you most scared of? Okay. Failing your own. Let's not go there. What are you second most concerned about? Have you been enhanced? Have you been enhanced? An enhanced review, peer review. You probably, or you don't work. Okay, well, you should live in, you need to live in fear of what you don't know. Because here's what the peer reviewers tell me. Les, I had this peer review. I spent, how long do you think they spend on a typical lender? They walk in, they grab your work papers, and they're looking at your lender. How long do you think they're spending on this? Stan, how long on your 4 hours? Okay, 4 hours. Now think about the conversation Andy Schell just went through. 4 hours? What the hell is he going to know in 4 hours? Well, you filled out CX 7.1 and you didn't have no freaking linkage. Right? So here's what the peer reviewer tells me. I got enhanced, Les. I got an enhanced review. Went to Charlotte. And after about a series of 30 emails, he calls the lady on the phone and he says, by the way, how long do you anticipate this little review of yours is going to take? She says, well, I think by the end of this week I'll be done. And he goes, no, whoa, sister, you're telling me that's going to be about 40 hours to review my peer review of their audit? She goes, yeah, that's probably, I might stretch over a little bit to Monday. And he says, don't you think this is a little unfair? I get about 4 to 6 hours. You can take 40 to 48. Oh, and that's what we're going to do, right? Like the doctor said once, you may feel a slight pressure. So here's the dilemma, right? How do you get this presented so that they all make this risk go away? What does linkage mean to you? Doing what you say you're going to do. What's the documentation of doing what you say you're going to do? Okay, now that's not as bad as I get sometimes. But here's the true linkage. We were laughing about this, right? So It's not, how do I write something in here to that? It's like I'm supposed to write something. And I'm going, that's not what this comment means. Here's why why we can rest assured that isn't, the way the form said it isn't exactly what I'm trying to get to. So let's go back to the to the paper, sorry. Oh, is this like 3:32? I forgot. I'm looking at my clock. It says 3:30. So that's great. It's 3:30 here, right? Okay, sorry. I'm having a little mini meltdown. I was thinking about having a seizure. Okay, reviewers should consider the linkage between the risk assessment and the auditor's procedures, and they should determine whether the procedures are responsive to the risk, the financial statement, and the assertion level risks. It's not a magic phrase. Are these procedures you picked appropriate based on your risk assessment? Tell me how you write that down, Dan. And what the procedures are going to be. Okay, now see. Oh man, I'm getting roids just thinking about that. Hmm? Well, that's if you're following a PPC methodology, right? Because they're trying to make it easy for you to say, well, your risk is high, so therefore you have to go to extended. But what really does that, let's say this particular thing, cash. Risk is high on cash. What does that typically result in? What procedure is an appropriate procedure or audit procedure for extended or higher risk on cash? That might be one of them. What's really one I'm looking for? What's the best sort of evidence you can get? Confirmations. Third-party evidence, right? So third-party evidence is this fantastic thing. Now, here's what the peer reviewers are saying. Now, I approach this more, every day from multifamily, but let me give you two in this light. I say I have a mortgage that I have to audit. Is the risk on that mortgage high or low or moderate, John, on a multifamily engagement?
Multifamily, I would say it's pretty low.
Yeah, I think it's low. It's so freaking low. What will I be looking at it for? But what does everybody do? Audit procedure-wise? Oh, they run right off to confirm. Why? I don't know. Yeah, but I can tell you with risk assessment, I can show you that the risk is really low. Oh, so you told me. See, there you go. You said it was easier than to do something else. But the truth is the peer reviewers turn right at me and they'll say, look, you confirmed the debt, but you said risk was low. The linkage is broken, right? They assumed the linkage was confirmation is a response to a higher risk, so therefore confirmation, you didn't really, if you say, well, I wanted to confirm it, and they're going, well, why'd you confirm it? Well, and you say, well, it's easier. We're probably not going to be wild. Is there a question? Oh, yes, Dan, go ahead. So you wrote that into your QC document? Now, whether or not we agree to disagree or agree to agree, I don't know. I would just say I'm not sure that that's a general idea from AUC 230. Okay. Okay. Now, if I'm going to do this, what I'm going to tell you, look, I'm not here to tell you what you can do or what you shouldn't do, right? I'm not that wonderful. I might assume that one day, but not right now. But what I am going to tell you is if you want to do a certain procedure, then you have to make sure the linkage exists. So like on the debt one, here's what I do for the mortgage. I said, well, you didn't confirm the mortgage to get the mortgage balance confirmed. I'm going to work that out so that you actually confirm the mortgage because you wanted more to know about the escrows, and you set escrow risk higher, and then you confirmed the balance for the escrow, and the mortgage just came along with it, right? So we have to work out little ways to make this work because I can tell you the peer reviewers are being told this magic linkage thing is not a language thing you can write in unless you said, like you said, Dan, this procedure, we're considering it to be a response to a basic or a low risk. And that's what we're hoping. I don't really have to write most of that down, but I picked a low risk assessment, so I picked basic procedures, okay? That should be responsive to the risk I set, based on the evidence. And the other problem with risk assessment, and you're going to see it real soon here, I'm going to go back to that, is that we don't have a lot of work paper documentation on how we got to low. Okay? I can tell you how risk assessment went. High, moderate, low, high, moderate, low, 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 lower, low. And I'm going, where's the evidence? Well, we don't have any work paper documentation to do that. Well, why? Because we wanted to plan and hurry and get to where we did audit work. And I said, well, planning was auditing anyway. It's risk assessment procedures and determining further audit procedures, whether they're done in interim or year-end. Okay, now lastly, controls. Failure to evaluate the design and implementation of controls. Consider what could go wrong. What are the things that could go wrong? Well, Andy gave you the biggest one today. Overstatement of value interest rate lock commitments. That was the easiest thing that could happen. So we'll go back to my form. What's the problem here? Because this always says high. Why is that always high? Because I don't want to test. Guess what? Nobody gives a rat what you want to do. It's what you have to do. Okay, I'm on a HUD job. I'm on a lender. What's the internal control procedure you're going to do first? What is it? The quality control document. In fact, that's my risk assessment procedure straight up. I'm assessing the existence or the adequacy of the QC plan. The testing of that is a mandatory compliance requirement. So it's pretty hard to come back in most of these cases and say, what? I didn't test control. Well, we didn't give an opinion, though, did we? We never gave an opinion unless we're on the I can't say it right now, public company. Yeah. But a HUD audit, we're just going to say, I didn't give an opinion, but I did an assessment, and I had to go test what? What did I have to test? Internal control over compliance. What's the number one internal control over compliance again, sir? Quality control, the QC plan. I don't really care how you spent your freaking cash disbursements. It's J.G. Wentworth, it's your money. Spend it like you like, right? I mean, all I'm worried about is where the expenses got classified correctly. What's my other problem? It's the loans, right? Then I start working on the derivatives, and I start going through all this process and how you validate interest rate lock commitments. Well, guess what? What's the number one compliance requirement HUD's concerned about? Net worth. Where can an understatement of net worth occur? Well, damn near any of those things we just talked about. So, damn, I have to go test internal control. Anytime you're on the client, on the HUD side, I don't care what it is, multifamily, public housing, lenders, you have a requirement to test internal control over compliance. And I can tell you it is really hard to separate controls over the financial statements from controls over compliance. What's the one area I can do it in? Disbursements. Clearly separate. Unless what? I have kickbacks or LO comp issues, right? Start going down the list. Okay. So this form's problematic, and they're going to tell you right away, if they can't come in and they see you doing this wrong, then a little unhappiness will follow. And they're going to tell you straight up here, for the next 3-year cycle, if the firm has nonconformance with this risk assessment stuff, here's the table. Failure to comply with risk assessment, it's isolated, you get an MFC. Oh, that's not the worst possible thing. You fail to comply with risk assessment and it's systemic, you get an FFC and an implementation plan. Fail to comply with the risk assessment standards and have other deficiencies in testing that resulted from it, and it's systemic, you're headed to the F-bomb. Fail. And I had a guy email me and tell me, I don't know if you heard this, Les, but I haven't verified. He says, if you get like 2 of those in a row, you're done. So I have not confirmed that. But he said, look, this is pretty serious. Now you're hearing the same thing to some extent, right? So risk assessment for us and the form. How do we move ahead from where we are today, knowing the only form you have for this year, and sooner or later I'll give you an alternative. I'm promising that right now. So let's go to set of financial statements. Okay? Sample lender. Okay, we're going to start with basic analytical review. Now, I got cash. I am wildly happy that I have that cash because what does it tell me already? I got some liquidity here. Now, you'd think this was going to make my life better. Yeah, it helps, but it doesn't make my life especially better. Business is down. Not surprising. Okay, I'm not shocked by this. Mortgage loans are down almost, in half. Accounts receivable and advances, oh, that's, related party, that didn't change much. My derivative asset, now look, I want you to think about this right here. My business is down almost 50%, but there my derivative asset sits at what? Gosh, about 500,000 less than last year? Okay, I'm not sure what I think about that just yet. Now, I had some other assets, and what you're going to see here is they had some software that they sold to a related party. And that's where you get this note. What do you think they're trying to do with this note right here? Well, they're mad it's not included in my net worth. Right? That was a pretty big shock to them. And the auditor does remove it. Okay, we'll get to that in a minute. Okay, so payables. Man, my business is down 50%, but I've only dropped payables by that amount. That didn't work out very well with the highlighting, did it? That is not exactly a great sign, is it? Now, this I expect. I probably have some analytical review on this. I think this is interesting. Okay. So we can highlight a few challenges. But what do I need to see here? Where's what I'm most interested in? Okay, now my net worth says I'm in good shape. Let's actually go down to see what the auditor did. I'm not going to get into all this right now. Sorry. Liquidity. This is Jenny May. Okay, here we go, HUD. Okay, so a quick calculation brought us up to here. Originations, 430, have 1 or 2 loans of servicing that he couldn't get off to somebody else. Net worth recap, did the calculation, net worth required, net worth of here, back out these 3 things, and his minimum net worth was 2.5, and he's sitting at $538,000 underwater. Now, Andy had a little thing he showed you earlier about how this was going to work. I'm going to show you from this what this lender looked like. I'm just going to bring it up in a spreadsheet I did. It was easier. Rather than to refer to all the notes. Okay. So here's the footnote for interest rate lock commitments, right? So right now, look at my notional value. Last year I had, RLCs 199 with a fair market value of my lock commitments of 3.7. I'm down about $42 million. It's not terrible. It went from 2.189. But look at that. How much of my net worth is coming from my interest rate lock commitments? Well, hell, all of it, if I had any. What my real problem is what? I'm a lot lower than 500,000. Look, you could look at this. So how did I come across this, by the way? An audit firm who picked this client up wanted me to help them determine what the fee might be because they've been out of the lender world for 2 or 3 years. And I do a lot of multifamily training for them, and they said, look, we want you to just walk through this. And I said, first of all, let's not talk about what the fee should be. Let's talk about what you're really going to do. Let me talk about what your challenges are, because if you already accepted this client or not, okay? So anyway, my risk went right up the pipeline right there because now my pucker factor is increased by about 20 times. I hate to be crude, but it really is. I'm getting ulcers now thinking about this. Well, that was the next thing. But yeah, the loan loss reserves, right? We're going to go down to that. So there's loan loss reserves. Now Stan, what do you think they're going to tell you when you walk out there for this? What do you think they're going to tell my friends when they walk out there to talk to the client? These are, we got all loan loss reserves we need. I said, well, let's talk about this. We don't do bad loans. We don't do no bad stuff. So, as of 2015, I had $1.6 million. I added $1.1 million. I used $1.7 million. I was down about, I was down $100,000 the first year alone. So the next year I start off with $1 million, and I add a $459, and then I write off $1 million. We are in a never-ending spiral into the seventh circle of hell. That's where we're going, okay? You don't have to be too bright to do risk assessment, frankly. That's what? Phantom income. So where's my look, I got phantom income there. I got another between $0 and $3 million in phantom income on the line above. And it's, like Andy said, it ain't cash. Okay? This stuff is not that hard to get to. We're filling out forms and walking past all the problems in my world. I mean, if I sit and look at work papers, I guarantee you this firm thinks they've just killed this. They've crushed this. I know who the firm is. I mean, I know who it is. They think they've crushed this. Okay? And I'm sure their audit work papers, if I went to risk assessment, it has none of this. They're probably filling out CX 7.1, and there are no risk assessment procedures. See, this analytical review was so in your face, it's just staring at us. How do you miss it? Well, you don't look for it. And I'm going, look, I only have to stop at two things here. If I looked at this audit, I'm saying my risk is what? My loan loss reserve risk is inadequate, and that pales in comparison to the valuation of my interest rate lock commitments. Where am I going to spend my audit effort? These two are going to take specific mention, aren't they? I mean, I don't know what else is wrong. I don't know anything about them, right? I have no history. I know nothing except that's what I see. And so what I see out of this is sale of proprietary software for a note of $7-8 million to a related party. And then at least they took that off. And I know one thing for sure is that the client is talking to the new firm about making sure that asset comes back on the books. And I'm going, no, not so fast, right? Be very careful how you approach your conversations with them. So, look, analytical review is your friend. I did some stuff last year with loans. We could do this right into the lender area. I have some other risks, by the way, that we're not actually thinking of completely. What other risks does the lender have? Now, in this particular case, you can go straight to loan files. I sorted this by rate. I said one of the risks the client doesn't really know about is all the CFPB stuff that people are saying Trump's going to get rid of. I don't know what they're going to do, but right now it's on the books. So what kind of ATR risk do they have? Most clients, if you said, how much ATR risk do you have? They cannot tell you. And yet they should know immediately. How do I know that? Because they could look at their loan files and look at, this is a little old. So interest rates, where are most of the rates turning out at? Low fours. Okay. Now, there are about, 1,600 loans in here? So when I see loans up here, 3 to 4 points over, what do I know immediately? ATR risk, they're doing risky loans. Ability to repay, and what do I know also about these loans? Every one of those loans was done by a TPO. I'm back to my QC risk again. Are you focusing on your third-party providers for risk? Hence why Monique talked to you about today about this bombshell thing about getting the servicing report uploaded with your client's financial statements. You guys wanted to look at it anyway, so I mean it should be there. But having told the client that is nothing but a focus on you're still responsible for all these people that are your vendors. So what was the next risk? Third-party vendor management. And I know I've got all these people. Now, luckily, I don't know that my client they didn't service any loans. Or the one on, not my client, but the one on the risk here. What's my next risk? Remember, now these aren't HUD risks. Now they're just simply financial statement risks with laws, regulations, contracts, and agreements. Loan officer compensation. I can tell you can walk right out to these models and plug in the formula for how comp should be determined and extend it down. It will never match, but how close is it? They say, here's my stated policy for paying commissions. If it's not matching within materiality limits of that, you know you've got LO comp risk. Simple analytical review is going to be very telling. Now, these are all planning procedures, but you're saying they're not part of it. You see, this is the evidence you use for the observations, the inquiry, or the analytical review to get risk assessment done. Now, I don't worry too much about linkage. The focus is hot on linkage. All I'm really trying to say is the procedure was appropriate for the risk assessment, right? And I'm probably going to write in here, in linkage, if I have to write something, it's going to be something about why I believe my procedure is appropriate for the specified risk. You guys are doing that, right? You said some are doing that. Yes, ma'am. Oh, go, please, please. I'm sorry.
distinguish that I had to do? Because
I-
what I discovered during the audit.
Well, during the, I would say it this way, what I discovered during my risk assessment procedures, and then I did further, right? My audit progressed, and that happens all the time. That happens all the time.
So now I have to reassess my risk.
Oh, a risk, it never stops.
Doesn't that, when you wrap it up in your conclusion,
Well, you hope so. I mean, look, here's the thing. I think more people, if we focus, here's what I would say about your memo, the team memo. I would have that team memo based after, that conversation's after we finished risk assessment procedures, right? So we said, look, here's what we're going to do. We're going to do this kind of analysis. Trust me, I can do that analysis for a ton of clients. In fact, I'm thinking of actually having a business that does that for clients, right? What are your quality control risks? Because they don't know how to assess risk either. Their risk is, we're not selling enough, or my net worth's too low. And they're really better business people than that, but they're really just focused, laser focused on sales. So their CFO, unless their CFO is the right person, strong enough to say, oh, we got some problems here, well, we're going to pull the reins on some of these schemes, then we get lost in that. So for me, I finish risk assessment procedures, have a team meeting, what's our response? I think the better that memo is, the more likely you are to get a better coverage. But just simply a memo about all this way most people do it is insufficient. Oh, yeah. But we at the end of this audit, we're supposed to go back and conclude that our risk assessment was appropriate. Or we made a change. Absolutely, yes, ma'am. In fact, on the memo that was up there from the PRB, they're going to add your memo. There's a mention in the memo. And by the way, that memo is in the work paper stuff for the documents for this class. It's in there. So you can read the whole thing, okay? But you're exactly right on how that memo would work. I might use the memo to discuss why we thought the steps were appropriate rather than documenting on the linkage box in 7.1, or you might correlate them together. The key is just being able to do it quickly, right? You don't want to spend all day on this. Well, that's why I'm saying the issue wasn't the risk assessment, the form itself, it's the procedures you did to show how you got to risk. And I probably won't get through all those slides, but they're going to tell you on significant accounts, if you're going to set risk at low, you must show me why you or how you got to low, right? What mitigate? Well, not even how you determined the risk wasn't what you thought it was. Because if I'm mitigating risk, I'm probably going back to controls at that point, right? So how did I assess it? Does that make good? We're on the same page, I think, right? Mm-hmm.
Can't we just insert our work paper reference there, and then the conclusions we report on the work paper over there address that we've done the testing and based on the risk assessment concluded?
The difference for me, look, you're going to see a lot of stuff, but the difference for me was that I'm trying to show the peer reviewer that my procedure, the selected procedure, is a direct and appropriate response to my assessed risk. Not showing where the work paper happened, per se, but this procedure is an adequate response for my assessment. See what I mean? That's what we're just trying to get to. I mean, if we just stop the madness for a minute and just get people back to numbers and get rid of the forms, and we say, look, here's a set of numbers. What do you think about that? Oh, I think that's bad. What should we do? Let's do this, right? And I have a menu of procedure. You guys would do this, I would do this, I would do this. So why? Because I think this is addressing that. So what's my problem with interest rate lock commitments, right? This was valuation. You're overvalued. So what's the worst going to be? Andy told us already. What are my challenges with auditing the interest rate lock commitments? There's two real components you can't deal with, right? First was pull-through. How adequate is pull-through? And that one you can test after the fact, but it's really hard to get up front. And you know, there's no pricing, I can't get quotes. And the key thing he said there, that whole conversation, was it's level 3. It only existed today, right? And tomorrow it's not the same. And there's no quoting. It's all level 3 guidance where most auditors try to claim it's level 2 and they can rely on certain things. But I cannot get my pull-through up there, and I can't determine my true cost to complete. And there's no guidance on that, so all I can do is determine ranges. And, he wants to, we want to talk about getting, some costing strategies and things like that. It's really tough for me to support too much because I think there's so much judgment involved. You're just going to have to damn near negotiate. And if I'm sitting with all of my net worth in interest rate lock commitment equity, that's more a conversation about, do you really want to be hanging out there on your tail, right? Because you're upside down, and I'm happy to have a prehensile tail to hang upside down. I don't have that. The monkey does. So you see our risk. I mean, this is really where we're going in our business here. And I can tell you the bigger firms, they're not doing mortgage lending per se. But when you look at, say, things that E&Y or DT are doing on their larger clients, they're plugged right into the data real time. They're just going through transactions. They're big, about 15 to 20% of hires in a Big Four right now are math grads. And they're programmers. Why? Because I'm mining data. I'm telling you what I want to see out of the data, and we're real time into the client's, say it's loan files, we'd be real time into the client's loan files, and every time a certain transaction meets a certain criteria, it comes to us to look at immediately. We're not waiting for any time to look at it, which is what the client's QC should be doing. And it just isn't. Okay? It may be soon. But that's what I wanted to get to here for this. And we've got a couple of other places to deal with it. And you don't want to preach too much. So Dan, was I trying to be kinder there? Well, it's a tough, nobody wants to hear this conversation, right? I mean, that's bull. That's absolutely what I should be doing. And I should do it. Well, yeah, but see, then the problem is what? If I say it high from the beginning, what's my problem? I'll never leave this damn job. Set it high. How many loan files am I going to audit? Minimum 60. Well, let's just go do that, because that's going to pan out. It's going to pay me real dividends. I'm going to do a lot of time in worthless stuff that didn't have any meaning, right? Maybe it didn't. I don't know. I'm just assuming that, it's going to have problems for me. My bigger problems are never in the loan files per se. Oh, I agree at the form. And my theory is this, Dan. If we did the right work, the peer reviewer should be able to see that right away. The question is, are they too married to the form over the, form over, never mind, I can't say it. Form over function, right? And I think we're a little stuck on 7.1. Yeah, and I think if we moved it away from the form and back to actual work, say I had a risk, I put the financial statements up there that I had. And I'm walking down, I'm looking at the accounts going, I compare this to this, and I'm just going to set risk here. And I'm going to do it, I'll have a place where I can do assertion later. I would just put off to the side. Well, think about this. If you took people out of that model of the form, and you put them back onto this, okay? And you said this, you just went to them, and you say, okay, let's look at this. What is the risk that cash is not in existence? And what do I have to prove that? Okay, so I walked in, I have a bank rec, I have a bank statement, it's in the name of the company, and I have the ledger, I probably have the general ledger with my stuff right now. What's the likelihood that cash is not in existence? Slim to none, right? Unless I got some real weird stuff on that rec. Risk is low. Okay. What's the risk that that's all the cash that's supposed to be there? Completeness. Well, I don't know that question because I don't know if I had revenue that didn't make it in, right? That's a little bit of a problem. What's the risk that cash is valued incorrectly? Just say it, it's zero. Right? It's cash. Okay? What's the risk that it's not my cash? It should be somebody else's cash. It's pretty low again, right? That's pretty low. Yeah. Well, the question is, did I take cash that really wasn't mine? Should some of that have gone to the borrower? Did I somehow fraud them? Well, I don't have enough cash to probably be too material at that, right? So if I just did that each way down the form and said, okay, what's the procedure you're going to do? You're going to get the bank statement, you're going to get the bank rec, you're going to review those things, no weird adjustments, none of that. That's your risk assessment procedure. And then you're going to say, what's the main risk what could go wrong? The only thing I know of real quick, the assertion is probably I don't have enough completeness information. Okay, I don't know if it's complete. It's probably my cash. I think we have no problem with valuation. We don't have any problem with with where it's classified or disclosed. None of that's existent, right? It doesn't exist. It's not there. So the only risk is probably completeness and existence. I proved the existence. I don't know what to do with completeness right now, but I can probably figure something out. Mortgage loans held for sale. What's the biggest risk there? It's valuation and existence, right? And what are we going to do to test that? Well, I got a warehouse line. We committed down to it. I have subsequent testing, but I'm at planning right now, so I could set this up so that I look at the next month. Say I'm picking on September or October, and I just pick another month. I look at what we cleared off. I have history, right? I have plenty of history to prove whether or not that's a good thing. Accounts receivable, well, that should have cleared out within a month. I have no idea what this is. We already know where the big problem is, right? And that's valuation. I mean, if you stopped and got away from the form and just went down here and said, look, let's just have a little thing that opens up. You click on this and it says, what's the risk of existence, completeness, valuation, or something like that? And you say, what's your procedure? And before I give you the risk assessment, I give you the procedure to do. Say, here's the procedure you're supposed to do. Get the bank statement, get the bank rec, review, blah, blah, blah. And then based on that, you come out to this next thing. Wouldn't that solve most people's problems for how risk assessment was supposed to be done? And the problem is we're not looking at risk assessment has real audit work. We think we're going to hurry plan so we can get auditing. And I'm going, no, risk assessment is auditing. The procedures are real audit procedures, and then we decide what else should I do for further audit procedures. Okay? So here's a couple of problems. And I've got to shortcut this discussion now. We won't even get to play a game. Unfortunately, you're just going to go. So let me just point out a couple of other problems that exist in our world. The Yellow Book thing. Now here's the findings. Okay? 2017-14, they failed to maintain net worth. Okay, well that's clear. Nobody has a significant stress with that. Failed to meet Ginnie Mae net worth. Okay. Failed to maintain minimum capital. Oops. Okay. Finding 1, incurred net operating losses in excess of 20% of net worth. Now, what's the first problem you see here? What's that? First of all, they've broken every Yellow Book rule because they have no components of the findings in place. Here's a finding, here's my corrective action, my management response. When that went to HUD, it wasn't printed with a corrective action plan on client letterhead. That had to be an exciting moment in time. I hope they did it separately. Okay? Now, I want you to think about that. Now, think about those findings. Okay, here's our HUD Audit Guide report. In our opinion, the client complied in all material respects with the compliance requirements referred to above that could have a direct and material effect on its major HUD programs for the year, except for 1, 2, 3, 4, right? So they qualified the opinion. That's a modified opinion, totally appropriate. Here's the Yellow Book report. I can't look for any word that says finding whatever there, can you? Of non-compliance that were required to report it under the Yellow Book. Well, if you don't meet HUD net worth and you don't meet Ginnie Mae net worth, what did I also know? You didn't meet Fannie net worth and you didn't meet Freddie net worth. You didn't meet anybody's net worth. What the freak are you going to do next year? Lend more. We'll make it up on turns. Right? All those findings should have been included here. Those are absolutely financial statement findings under the Yellow Book. Now, what was missing? No more, nothing on Ginnie Mae or Fannie Mae net worth, and nothing on Freddie net worth. It's like they're not even requirements. I had to test. There's no book that told me I had to do that, so therefore I skipped it. Didn't meet any net worth. In fact, there's a footnote. If you look at the, I didn't have the first page opinion on this, but they didn't give a going concern opinion on it. In one of the footnotes it says, we're really going to be a going, we're still a going concern. We're not giving a going concern exception to this opinion, but we're not going to lend anymore. So I don't know what that means, but apparently we didn't even have to have a going concern. What's that? Well, yeah, I mean, if you know what you're doing, you know your risks, right? Well, I don't know how argumentative they are, right? Go ahead. Well, they're not going to get it. I agree. I don't disagree with you at all. But my point on this is, I don't know what they're going to do anyway. I didn't pick it up for that. They got all my warning bells. I told them all my warning bells, right? So they get to do what they want to do. And if you maybe set the fee appropriately and have conversations, then you can make that work, right? But otherwise, you're a toasty-o here. But this person did the work and had the opinions and pretty much messed it up. And I think if you ask them today, they think they've crushed this baby. I've got all I need to do. And I said, man, this is a real problem thing for us, okay? So, and this isn't just Joe Schmo down the street doesn't know what they're doing, theoretically, okay? This isn't some small little neighborhood guy who says, my client doesn't, I picked up a friend who that does. So this is our problem with risk assessment and how we do this. I can tell you that internal control represents continuous challenges as you wrap up. Let me give you access to one other tool that is here. And it's back on my internal control stuff. And this is on my website. It's for free. The one thing I did this for more than any other, oh, come on, scroll down here. This is on our website, so, as you walk away, we went through all the controls, and we actually put together a list of the controls as PPC had them in CX 5.7, and it's a disaster. Nobody fills it out. But we put it into a program where you could actually go up here, see the controls as they were listed. I'm going to do some more revision to get it down to lenders, and highlight which ones they did. Okay, there's an actual box over here. The client just has to mark, I did this, I did this, I did this. And then you come over here and you say, okay, refresh the table. Here's what my client did on controls. I get it by account, by process, by assertion. That's CX 5.7, 5.8, 5.9, 5.10, 5.11, and 5.12. I think it goes that far. It's on the website. It's for free. And by the way, this is just crushing it. To fix the lenders, I actually put a list of the lender controls that the OCC and 2 other agencies listed. Servicing assets, there's a list of controls. Loan production, a list of controls. Secondary marketing, a list of controls. Servicing, another list of controls. Most of this stuff is not what you think it is either, by the way. That's on the website now. AHA CPA. No, this is different. This one's on the website right now, just as it sits here today. I haven't been able to quite make a couple of changes that I wanted to make it look sexier, because it's going to take a little time, and my Excel person's not around right now. So what I said was, look, you just have to pick from these on your own. Where the other controls PPC did, that were easy to restructure. These, I'm just going to weave them in later into my overall tool. So next year I'm going to have the tool just be done with this form, the PPC forms. If you're a HUD-approved lender, you can use this tool. I've had the multifamily one. It's been through peer review once already, so we shouldn't have any problem going the rest of the way for a lender. But what's that? It's in the class materials. Okay? Should be there. The other thing you'll see is an independence form. What's the big problem on independence? Make sure you send your client your depreciation schedules. Don't get caught hosting. And by the way, that will probably result in some change in your engagement letter. And I put an engagement letter together right now that shows this sort of language. Well, I put the language together for it, and it's really just one section. It's not hard. There's nothing unique about it. But what the peer reviewers have been telling us to do is, look, here's a list of the non-audit services. The greener ones are from the yellow book. Yellow is stuff we added. Calculating depreciation for assets in accordance with the lives, amounts, and methods you previously agreed to. That's an important thing. So you get in there that they did that. And then with regards to the previously described depreciation schedules, you will also be required to provide us with the lives, method, and amounts for fixed asset additions during the year. And they will rep to the same things. Plus, they will also rep that they received a copy of their depreciation and amortization schedules. Okay? I mean, that's the one change for independence this year. Don't get caught with that problem. Okay, well, over time. Oh, my hell, I forgot to give you that right up front because it's sitting in the back, and what am I, Kathy? Skiing. You have 4 choices there, right? Skiing. The form is just how it's going to show up on the internet when you go in there. So they'll give you the 4 choices, and you just have to highlight the one you circled here. Skiing. Why didn't I say that earlier? Shit. What's that? What's that? Oh, the link will be live shortly. Yeah, I figured you wouldn't do that right away. Give it a few minutes. Class is over.
Hey, one other comment. When you do your AUP, the AUP and link will be wrong. It has not been updated. So you need to have your own AUP.
Yeah, go to PPC or whatever. You can get it from us. Do not, I guess what he's saying is, do not rely on the LEAP printed AUP has your real AUP. The language is inappropriate, so have your own copy. Let LEAP print what it prints, but you have your own version. Take the language from us or PPC. But do not rely on the LEAP printed AUP has your specific AUP.
We talked to them this summer, and they weren't even aware it was wrong. Someone asked that question at the webinar, and they said they were working on it, but it would not be fixed for this filing season.
Yes. That's why they didn't make the change. Multifamily and public housing did make the changes, but LEAP did not make the change. Yes, and it was kind of my understanding that most people had probably in multifamily converted to that anyway, separate engagement and rep letters. So I hadn't brought it up specifically because I was under the impression that most people were there. If you didn't hear that, Dan's saying, remember, AUPs require their own, I would say engagement letter also, and their own rep letters separate from the normal audit. Okay? Yeah, it was, well, most of the time we would combine them. Now they're separate. Okay. Awesome. Yeah, most people are moving to engagement letters that are audit and AUP separated, and the rep letter, I think, for sure is a mandatory. Yeah. I couldn't tell you the engagement letter has to be separate, but the best practice is clearly separate. Yeah. Have a wonderful week.